Good morning, folks, and welcome back to Almus Market Mornings. Whether it's President Trump or investors, Fed meeting this week will provide some direction for the rates market. For the markets, it's not just the Fed meeting. There are the meetings from the Bank of England, Bank of Canada, Bank of Japan this week, keeping things busy. Over the weekend, there was also an interesting tweet by President Trump asking NATO nations to put tariffs on China to pressurize Russia into ending the war. Rating agency Fitch downgraded France to A plus from AA minus. Good morning, JK. What are you making out of these developments, especially when it comes to the French downgrade? You think that can put further pressure on the yields?
Good morning, Swaraj. I think it's people know the situation in France for quite some time now. Uh, the fiscal issue and also the political deadlock, which has actually led to the fall of the previous PM, and even the new PM will have a lot of difficulty in pushing through the budget because of the rating downgrade. Although it was well expected also. So I do not see a major impact on the markets because of this, but definitely it's an ongoing negative for the Eurozone, which has its own diverse problems among the major economies. But so far, Euro has not shown any reaction to it, and I think more focus, as you mentioned, was on the upcoming meetings of central banks, where also I think most of the decisions are, well expected and will be on line of expectations, and therefore, people will be looking forward for any surprises or the post-meeting state, particularly the FOMC, where 0.25% is discounted. Um, Unlike a few days back, even the hefty rate cut of 0.5% is now almost ruled out because the inflation is not coming down, and it is going to be reflected in the CPI in a gradual way in the coming months too. Fed is now focusing more on the weak employment situation, which could eventually lead to a weaker economy. Therefore, they are resuming rate cuts after a hiatus of 9 months. On the Bank of Canada, because of the weakness of the economy is allowing them to resume rate cuts. Bank of England hands are tied because while the economy is doing very poorly, the inflation is on the rise. So again, kind of stagflation situation there. They will not be in a hurry to cut rates. Bank of Japan rate hike is expected, but not this time. Maybe in October. But for some pretext or the other, Bank of Japan keeps postponing the rate hikes. So that's the overall expectation. But then we'll see whether the central bankers make any new statement that is not in the realms of the market. Yeah, I mean, on the market, on the economic side, Friday we saw the inflation number from India also, mm, published and shown a slight rise from the previous month. Yeah, I think that was expected because we were continuously in a disinflationary trend, hitting 1.55% in July. That was a 9-year low and bounced to 2.07%, mainly on a bounce in food prices. Food prices still continue to be on the negative side, though better off than the previous month. Coming about 2% means we are back in the 2 to 6% band, which is mandated to RBI for maintaining the inflation rate. At the same time, core inflation has slightly inched up 4.3%. All said, I think the GST rate cut announced by the government recently will eventually also depress the prices. Well, probably it can also, compensate for the unfavorable base effect that can come into play in the coming months. Therefore, inflation is likely to remain subdued, giving some room for RBI, which in my view will cut rate once more this year by 0.25%. That's a broader expectation. Of course, we'll also have another indication on the WPI data tonight, which is not today, it will be announced during the noon today, and that's probably going to continue to show a disinflationary trend as well. On the US side, we had the Michigan survey where the consumer sentiment was seen dropping, but the inflation expectations have remained on the higher side. So that's another indicator that the Fed will keep in mind. The expectations are also cannot be ignored. So that leads to a lot of behavior on the consumer side. Once they expect inflations to be higher, they will actually be spending less also. So that will also guide the Fed policy. On the Indian side, we had the rupee, which last week broke into new high at 88.44, but did not sustain there because the move itself was driven by a large outflow. But since then, market has been more of a two-way. So as I also clarified on Friday, I don't see a rupee in a continuous, big fall because we are already weak and we are already underperforming most currencies, undervalued in terms of RER terms as well. So we need really a big push from flows for rupee to see further weakness. Otherwise, it's going to be a two-way action. At the same time, might see some enhanced interest from exporters as rupee trades at its weakest level. The premiums are also on the higher side. On the global dollar, it's very much rangy for quite some time now. I think this week's decisions will keep it again on the sidelines. Market will be watching for further statements on sanctions from G7, which Trump has called for. But as I understand, I think G7 will be cautious about further sanctions because it also impacts their own import indirectly importing from Russia, unless they prepare themselves to be self-reliant or find alternate sources, economically viable. Then I think these sanctions will take some time to take hold as well. And so for the G7 dollar has been in a range. UK pound surprisingly holding at these levels despite many challenges for the economy. Euro very much rangy, not reacting to the negative news from the French economy. Of course, we did have Treasury budget deficit, which was presented last week in August. It touched 345 billion of deficit for the month, and this is the largest monthly deficit of 2025 and second worst on record for the month of August. And this also takes the federal budget deficit for the current fiscal year to 2 trillion. So just imagine, we have been talking about a lot of tariff collections by the Treasury Secretary, but the deficit keeps soaring due to the spending by the government. And so this is the most important factor that keeps the dollar on the defensive, and any gains for the dollar will remain in check, and it will be definitely temporary. So in any case, this week we should expect a very rangy market, probably some profit taking on dollar shorts and also on the gold long. Thank you.
Thank you, JK. And a lot of events to look forward to this week. Bank of Canada, Bank of England, Bank of Japan, and of course the Fed. Moves, as JK mentioned, largely discounted. FOMC expected to cut rates by 25 basis points. Bank of Canada is also expected to cut rates. Bank of England will be holding the rates since basis their commentary last time, and also the elevated inflation. Bank of Japan, interestingly, it's been some time now since we have been mentioning, and they keep postponing their own rate action. So they find ways, as JK mentioned, to postpone their action. Central banker statements will be closely watched for forward guidance. More or less, markets as of now, currency markets are rangy. They can be rangy, expected to be on the sidelines for this week, considering all these major events. We'll see we'll watch out for any surprises. That's it from us today. Thanks for listening. We'll catch up tomorrow with the fresh round of updates.